Hi, I'm MGR Invests, and today we'll be analysing National Grid, a fantastic dividend stock. But is it one for the future? We'll investigate this, looking at the future path of the company, the business finances, and whether this stock is currently undervalued. So stick with this video for a comprehensive understanding of this stock. Most people in the UK have heard of National Grid, but do you know what they actually do? Every time you plug in something or use your heating, then you're using energy. But getting it to you isn't easy. Energy is produced from renewable sources and traditional methods by producers, and then National Grid steps in. Within the UK, National Grid own the high voltage electricity transmission network in England and Wales, making sure electricity is transported safely and efficiently from where it's produced to where it's needed. They also own National Grid Electricity Distribution, which provides power to 8 million customers in the Midlands, South West and Wales. But it doesn't just stop here. National Grid have a network of undersea cables connecting up renewable energy and sharing green electricity with Europe. Further afield, in the USA, National Grid supply energy directly to customers. National Grid own and operate electricity distribution networks in New York and Massachusetts, electricity transmission facilities in New York, Massachusetts, New Hampshire and Vermont, plus gas distribution networks in northeastern USA. But National Grid is also looking at the future. It is the energy industry's first Silicon Valley-based corporate venture capital and innovation group. This means they're able to invest in smart ideas that will play a central role in the global transformation of energy. Their core principle is clean, fair, and affordable energy now and in the future. This all sounds good, but are they a company to invest in for the future? We'll investigate a few factors: competition, population growth, aka potential customer base, and future energy demand. The first, competition, is not a problem. National Grid is essentially a monopoly, owning and maintaining Britain's power lines, pylons, gas pipelines and more. With no real competitors, National Grid receives stable and consistent revenues, which also provides safety even in times of economic uncertainty. This has been shown in the 2008 financial crash and the 2020 pandemic, when the share price was barely dented. The second is population growth. Their three big customer bases are the UK, Europe and the USA. The UK is projected to hit 74 million people by 2050, growing from 68 million today. Europe is pretty stagnant and will sit around 446 million for the next 30 years. The USA, however, is a huge growth market. The population is projected to hit 404 million by 2050, a large increase from the 331 million today. Therefore, key markets in terms of customer growth will probably be in the UK and especially the US. The third factor is energy demand. As countries push for net zero, there's an added emphasis on clean energy such as electricity. It's estimated that the electricity demand in the UK will increase by 50% by 2035, as there's less reliance on oil and gas. Domestic energy demand will also show a reliance on electricity. Transport will switch to a reliance on electricity by 2050, as seen in the left figure, as will building energy consumption, as seen in the right figure. The profit pools of generation, transmission, and distribution of electricity will increase in both 2030 and 2050. The only downside to this is the significant investment it will require to cope with increased energy demand and an increased reliance on electricity production and distribution. In the UK, for example, a lot of the resources are currently going into nuclear power generation, with engineers and trades such as welders undergoing a shortage as they are pulled to these large projects. Having said that, the benefits far outweigh the cons in this situation. Population growth, little to no competition, and a huge increase in demand all point in favour of National Grid. This, in combination with their venture capital arm in Silicon Valley, paints a good picture for the future. So let's look at the business fundamentals. National Grid is currently trading around £10.50, which is an increase of approximately 5% in 2023. This outperforms the FTSE 100, which is currently down around 0.69% in the same period. National Grid is also a dividend-paying machine. Annual yields have remained between 4 and 9% for the last 10 years. They are currently at around 5.35%, and National Grid have not missed a dividend payment since 1996. National Grid has increased those payments year after year too. The 47p dividend in 2015 jumped to 51p by 2020, and National Grid has set its sights on a 57.5p payment for 2024. National Grid also saw record revenues in 2022, jumping from 14.8 billion in 2021 to 18.3 billion in 2022, and is aiming for a 6 to 8% earnings growth per share over the coming years from further investment and asset growth. Net income has also steadily increased, as has the earnings per share. The small risk is the 46.4 billion net debt on the balance sheet, which dwarfs the total equity of 26 billion. On top of this, as the UK shifts away from gas power, National Grid has already earmarked 40 billion of investments by 2026. This does pose a risk, but utility companies typically manage high debt levels due to stable cash flows, allowing them to borrow cheaply. Also, the cash position is growing, and their current assets exceed their current liabilities, meaning National Grid is in a good short-term position. Total assets also outweigh total liabilities, meaning National Grid can handle its debt. The price of the stock is not massively overpriced either. National Grid is currently trading at a PE ratio of 14 and a PEGI ratio of 2.05. Remember from our previous videos, over 2 would suggest overpriced, but National Grid is on the border. Given the future prospects, I think the stock should be trading somewhere around £11.20, and in my opinion, National Grid is a buy at the current price. If you found this video useful, please remember to like and subscribe. You can also leave a comment for any stocks you'd like me to research. The engagement really helps me out as a new channel, and I look forward to producing new videos in the near future.